Hello and welcome to this MBL Seminars webinar. In this session, we will be looking at the disclosure requirements, the new requirements, what has changed within the latest version of FRS 102, but particularly we're going to be looking at how those changes will need to be implemented by small companies. A lot of the focus on FRS 102 since the revised version was produced something like now 18 months ago has been on the kind of numerical changes around leasing, revenue recognition, not surprisingly, because those are the changes which will have an impact on the numbers, they will have an impact on the tax charge, and not surprisingly, clients will be focused on those issues. Disclosures always tend to get pushed back. Often, naturally, one part of that will be with the view, well, until we actually get to signing off the final first set of the new accounts, which might not be until we get into 2027. And again, even then, it might be that we're 8 or 9 months through 2027. Only then will we really need to iron out what is going to have to be done with the disclosures. However, obviously, as we're heading up to 2025, it is going to be really useful just to start flagging up where we're going to need more information, what are the things we're going to have to be thinking about, and also just setting the scene with our clients, because a lot of these new disclosures are going to be very contentious. It is bringing in a lot more than we've seen before. Things to think about here. My name's David Potts. I'll be taking you through this, hopefully what will be a fairly practical guide, fairly quick guide through all of the things we should now be adding onto the list to think about before we get into that kind of first live year under FRS 102.